here that I do want to discuss briefly, and that's the Aussie. The Aussie, as the Royal Bank of Australia's announcement, will be Monday night, and I believe this will be a very, very volatile announcement. My opinion is that they are likely to cut rates, and this is a classic case of buying the rumor and selling the fact. And in this particular case, what they're doing is they're hoping that they will not cut rates and that they will have a hawkish statement. I don't really see that as a likely outcome, but it's always possible. Okay, so we have to take that into consideration, but my view is that the Aussie dollar is grossly overvalued right across the board here, guys. So my opinion would be to start looking at those shorts. Now we can see that the 10-year notes are starting to push lower. They're coming up here, they're correcting. As they move lower, the dollar will likely move higher, so we want to keep an eye on those 10-year notes also. The Swiss franc currency, we're going to get into that with the dollar yen here. So let's bring into our currency pairs, the Aussie US currency pair. We can see that it's just taken out my resistance line here, but again, this is following this summit, and the only thing I can say about the European summit is that usually once the shock of the announcement, whatever it is, a day or a week or after the announcement, the market then continues on the primary trend prior to that announcement, and the primary trend was down, not up. So this is why I would suggest that looking for a place to get into shorts on the Aussie US currency pair is a reasonable play. Euro Swiss franc, again, I'm saying to my own clients also that 120 is the key level. That's where the peg is. All stops must be below the 120 level and remain, my view is to remain long on this currency pair. British pound US dollar, we'll see how this one plays out, but I believe it's going to hold its value against the dollar to some degree, but we will likely retest the 158.62 area. This is the Vantage Point 18-day predicted moving average, which is currently being used as a major support line. So looking at this particular play, my view is that the British pound will show gains on pairs like Australia. It'll show strength against Australia. It'll show strength against potentially the CAD, the Swiss franc, and particularly I believe it will show strength against the Euro Great Britain cross pair, and that pair will move lower, indirectly strengthening or at least having the British pound US dollar hold its value better than, say, for example, the euro or the Aussie dollar. Now when we look at Euro US, again, this big long candle after this summit, you can see them building in. Well, we've got the announcement, we've looked at the European summit, what they're going to do. I don't really see any big fix there, guys. Maybe somebody else does. If they do, sure, point it out to me, shoot me an email. I believe that this is another classic case of buying into something, and then when you really look at something, it's sort of like buying a brand new car and then going to drive it off the lot, and you pop the hood and realize there's no engine in the car. That's kind of like what the European Summit has done, in my respectful opinion. And you know, so my view remains that we're probably going to hold on this. As long as we stay below the 143 level, I think that this thing has a big risk of a sell-off. And you know, I like to always look back at not just monthly patterns but seasonal patterns, and I want to bring everybody's attention to what we see here from Vantage Point a year ago to this date. It started a massive sell-off that started at the 142 level and didn't finish until it was below 130. And you can see it here, the triple EMA cross, the indicators. This was a huge move to the downside. So again, the Euro US makes up, I think, almost 60% of the Euro makes up almost 60% of the US dollar index. So again, I tell my own clients, not only do I look at monthly patterns, I look at seasonal patterns. I look at all of this stuff in my analysis, and this points to a massive sell-off in the Euro-US currency pair. So you want to keep that in mind. Now, that brings us to the U.S. Swiss franc. U.S. Swiss franc, this is a cross pair. There is no such thing. It's Euro-US, Euro-Swiss franc. This thing, we've got Swiss National Bank intervention protecting the Swiss franc, weakening it, and we've got a potential dollar rally. We buy this one on dips. That's what we do. We have our triple EMA cross. I know it's moving lower. We're looking for this to base and start its turn. You can see the predicted short, medium, and long-term differences from Vantage Point are hitting grossly oversold. It's warning us now to start getting ready for the turn back to the upside. That's my, right or wrong, that's my view on this. Now, when we look at the New Zealand US currency pair, this one's kind of a funny one, to be honest. It's got a little more going for it than some of the other currencies. The Royal Bank of New Zealand is not likely to cut rates, but it's still susceptible to a risk rally. So where does that leave New Zealand? I think that it's going to take its cue from the Aussie-New Zealand currency pair. I believe that pair is going to probably sell off. That's going to hold this one potentially up above this 79.89 level. So again, we have to see how this one plays out, but I would definitely anticipate at least a retest of this 79 or 80 level. But again, the New Zealand dollar is certainly looking a little better, more favorable to the global investor right now than the Aussie dollar. This brings us to the US CAD pair, one of my favorites. We were selling this thing down. We were, with my own clients, we've been buying it this week off this support line between 99 and parity, but we've pretty good at the start of the week, but we certainly struggled at the latter part of the week as this thing broke lower on the summit. But even with it breaking lower, it's still holding it. US CAD is still holding above this support line, so we may see a push down towards the 98.50, 98.70 level, but I believe this level will likely hold. And again, we're getting into oversold territory here, so the likelihood that this is going to turn is very strong. Now, you have to be careful with the Canadian dollar, the US Canadian pair, because even if the US dollar is really strong or really weak, the US CAD pair has a funny reaction because Canada depends so strongly on the US economy for its own economy. So we have to take that into consideration, but I think it's going to probably hold its own, and I would start looking at potential longs on the US Canadian pair. Now, looking at the dollar yen, I think I've touched base on this in the yen for currency futures side of things. We've seen a year ago we had a massive sell-off in the yen currency futures at the start of November, the end of the first week of November. So this is certainly something we want to take into consideration here if we're thinking about going shorts. I'm fully aware that the primary trend on this is down. Vantage Point is saying to continue to sell. But again, it's basically running flat. It's a battle of who's going to win between the bulls and the bears between this 75 and 76 level. They have managed to take out the 76 level. They've managed to close below the 76 level. That is bearish, I agree. But the Bank of Japan clearly sitting watching all of this, getting ready for intervention. I don't know if it's rumor or not, but we'll see how it plays out. My opinion now is, as I've said in the yen currency futures side, as long as the 75 level holds, we stay long. I think that is at the present time a reasonable play. So with that said, this is the Forex Weekly Outlook for the first week of November of 2011. And again, my name is Greg Furman, market analyst here at TraderPlanet.com.